Hello, everybody. Welcome to Wednesday. The S&P 500 was down a little bit more than 0.3% today. And again, another day where we were in the positive territory, could not hold on to that. The minutes from the Federal Reserve meeting that happened last month came out and drove the market down. Basically, the minutes showed exactly what they've been saying, which is we're focused on inflation, even if it means some job losses, and no real conversations of substance about trying to avoid a recession. So the market's constantly hoping that there'd be something different in there, and sometimes there is, but not this time. But mostly the market went sideways today altogether. I think it's just waiting for tomorrow's CPI report. And as you recall from yesterday's conversation, the expectation is that the overall inflation rate that might be reported tomorrow should be a little bit lower. That's the expectation. But the core inflation, take out food and energy, might actually be up, which would not be a great thing, but that's already kind of baked in. It's why the market's kind of coming down. So really what we're looking for is some type of surprise one way or another. And so if it's better, market could rally from there. If it's worse, that what happens there, if it's worse, it starts the market to think about what might happen in the December meeting. So November, it seems like the market's already expecting 3/4 point increase. Well, the expectation, at the moment is about a half a point increase in December. If the inflation report is higher, starts people thinking about a possible 3/4 point increase in December for the Federal Reserve. And the market's got to readjust for that. And that readjustment means higher rates, usually means lower stock market values. And the problem is we're right on the edge of this cliff. We're sitting right at the top of where we were at the top in September of 2020. And there's quite a bit of room to fall below that because, there's a lot of gaps and not that much resistance in the next move downward. So this is why, I think it's a good idea to have T-bills and ultra short-term bonds and treasury bonds and things that are fairly safe, don't move too much. And then, of course, we have our big inverse position, which has been going up in these down markets here. So, we're prepared if that scenario does happen here. But this is a really critical time for the market right here. Are we going to finally bounce off of these lows and reestablish a new primary trend to the up, or are we going to kind of cascade down from here? So really interesting time frame if you look at it closely. Look forward to seeing what's going to happen tomorrow. I'll tell you what my opinion is about the CPI report, and we'll see what happens with the market. Thank you very much.